Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. This is the chart from 1929. You can see the red arrow here. That was the low of October the 3rd. There was a rally up into October the 11th. Then we took that out and made a 1.27 expansion. This is exactly, to the tick, what the NASDAQ did. And then the Dow Jones back in those days rallied to the 382. We didn't have NASDAQ until the 1970s. So it was a long way away, but this is what they had. It's the same pattern. I don't know. The secret to this is it's going to close up today, and then the next day is the day that you would expect. Once you took out that low, then you expect something really nasty to happen if that happens. I got put a lot of time into this, folks. I don't know if it's going to work or not, but so far it's been working pretty darn good. That was a 61% retracement. That was spot on. The gap down was pretty much spot on. So my goodness, we got to pay attention to it. We don't have to do anything, but I'm paying attention to it. Okay, so let's get this out of the way here and get back to some of the other things that we want to be talking about here on the show. We'll get up here. There's where we are right now. You see we're trading just a shade below that level right there, and that's why we're paying close attention to that. Okay, now let's move over here and talk just a little bit about the Treasury bonds, because the Treasury bonds started to pick up a little steam today, which even with the market up was kind of surprising. Let's make sure that I'll get this refreshed, because I have been running around quite a bit. Now, you can see here we've had 1, 2, 3 really strong days right here. There was our ABCD, if you remember. That was setting exactly, folks, at the 50% retracement of this move right here. As you can see, there it is right there, spot on. There's your ABCD. It's had a nice rally. So this is pretty much completed from what we thought it would do. What we'll do now is go down to an hourly chart, and we'll see what we're looking at. And as you can see, it's having some rocking and rolling today. And we'll use our old little friend, the old 382, to see if it had anything to do today on the market. And you'll see here we came within one tick of the actual low, and then away it went for another point. So sometimes they work, sometimes they don't. Now, look on the way down, folks. We were coming into this low right here. You can see the different swings that we've had. But if you just went and looked at them one after another, you'll see here that as you come into these, they come down just about exactly to the right level, and then that gives you your ABCD to the downside. And over these last 3 days, if you blew it up, and we did do that before, we're going to do it again just to show you what we're looking at. You make a really nice ABCD pattern right in here, which would culminate in a butterfly, because it's a double bottom. If it were a lower bottom in here, it would be a 3 drive to a bottom, but this is a butterfly bottom. There it is. Guess what that number is, boys and girls? 1.618, and here's where we're going. So I would assume what we're going to do now, given the fact that we're looking at this, is to make a ABCD to take out the old highs right up here at the old 1.618 level at 119 and change. So you see the double numbers up in here, folks? That's why it's going to be so very important. We're a point away from that, but I'd be watching this. I'm going to put my beeper in now so that we can pay close attention to it and see if it's going to be moving. Now, I haven't done any work here on the currencies this last couple of days, because I've been focused, of course, with the stock market, and that's what we're paying attention to here so far today. But this was a really nice setup we had in crude oil today. The unfortunate part was it didn't reach our level There was the raise. There's where we were here, and we were trying to sell that up here at this 72.18. We only got to 72.10, and that way it's come to the downside. Now, this has been a pretty good running market, as you can see here. We've had a heck of a run. So the one thing we want to do is go to an hourly chart, and we're going to take a look and see where that first 382 is going to come in. Remember, we had this one right back here. As I recall, that was pretty much spot on with this one, as I remember. There it is right there. So that means that this is going to have one too. So it doesn't look bearish yet. Just completed. All it did was complete this little ABCD right there. That's tradable. My God, it's $1,000 in it. That's a lot of bread. All right, now what we're going to do now is just make a low right back in here, run it up to the high right up in there, and that's what you want to be looking for down here at 70.83. Okay, now 70.83 is going to be the 382. Does it mean anything? Yes, because if it's a really strong trend, and this is a really strong trend, this is going to be your first out of the last couple days to buy it on a retracement to the 382. So pay attention to this number if you're trading oil, 70.83. Okay, that's the one you want to be watching. Now, we had one today that was literally knock your socks off type trade, but unfortunately, we didn't get filled, and that was in this one here, which was in the natural gas. Gosh, it had such a beautiful trade. I wanted to show it to you. We'll blow it up here, and I'm going to make it even bigger and bigger and get that done right here. But here was the trade that we had set up here. Was that selling at the 382 of this move right here? Okay, now it did get there, folks, but the problem was I didn't put the order in. It hit the perfect 382 off of that level, and then boom, it came down. The key to this, and this is why it was so very important today. You see that 382 right here, how it hit it once, and then it hit it twice, and then it rallied up to the 382. And this was a lot of money, $600, $700, and then breaking down below that. This is what crude oil could do. If it breaks down below those levels, then you've got a whole different animal. But as we're looking at natural gas, absolutely one of the best things to trade on the board, because it's got volume, it's got easy margin, it's got great fills. So it's something that's pretty cool. But let's just take a look at it here, and we'll clean this up, and we'll be watching these levels, because there's your low back on the 27th. Okay, you draw that in, and look where we're coming. We're coming right down here to the old 618. And how is it going to get there? It's going to get there by the old freight train of AB, XAB equals CD. And that'll bring you down here to 393. 393 will be a Gartley pattern. You got a really nice 3-day correction here. So watch this one right here at 393. Your stop would have to go somewhere down in this area. Big volume on this thing, folks. I mean, it trades a lot. And, well, that's my opinion, and I'm sticking to it. Let's see what we're watching here with the other things looking at. And we'll be right back in just a moment, folks, okay?
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, a little human interest story. Today is April the 1st, and it was the birthday of my good friend Eddie Horowitz, who passed away 3 years ago. Eddie worked with Hornblower and Weeks in Beverly Hills, and he was a very good friend of Amos Hofstetter, and he was the client. His favorite client, of course, was Peter Elides, and I got to meet those dudes back in '65. I met all 3 of them on the same week in the shore. It was Larry Williams, Eddie Horowitz, Peter Elides, and Jim Twentyman. I met them all on the same week. It was a big cycles week there in Southern California. But anyway, every year I always call Eddie on his birthday, and when he passed away, I still called Beverly to remind her, how much fun we've had together. Well, I was unfortunately found out today that she passed away yesterday, the day before his birthday. She was 87, living pretty good. Had some little tiny problems, but heart gave out. But she had a really great life, and I'm sad but happy because she was sad because she had missed Eddie. Enough of this. I'll get off my soapbox, but I got to share some of that stuff, folks, because it's what I live and dream by. Now here's this. Let's get back to the markets. I know little, so we'll just take a look. Here's what we're looking at intraday here in the gold. Now, first thing we were watching here was this 135 pattern this morning. Let's just do this. Let's get rid of that AI, because that stuff you can pick up yourself easy enough. Okay, there was your ABCD right there. Okay, there's your 135 coming in right here. Again, the market comes down. Okay, now what's happened on a short-term basis? And this is, when you're trading on a short-term basis, you got to use some of these tools that are available to us. So if we took a look after we have the move down, now these are large moves, folks. That's $1,500 from there to there, and you'll see it backed off right to this level. Now that means towards the end of the day, what should be happening is that we should be making an ABCD here with 3.5 hours to go. We should get all the way up to 50. That would be let's just put this little puppy in here so we can see it. It may or may not happen, but this is the odds of what we're looking at. There it is right there. Now, we're not far away because look at this. We've already come off the bottom here, $14. To get us up here takes us to $20, and that's right near the harmonic number of 18. So we can easily get to that level. So that's what we're paying attention to as we look at this happening here today. Now, I know everybody's interested, folks. all I can tell you is this, folks. Let's just move over here to this stock market thing, because it is a piece of really unusual educational properties, as they say in the trade. If this is the case, okay, the market should close up today, okay? Tomorrow, wherever the day, if it can close up today, if it doesn't close up today, look out. But if this thing is doing exactly what it's supposed to be doing, like back there in 92 years ago, then let's try to make a couple bucks off of it, all right? Now, you can see over here, the Dow Jones is already weakening quite a bit. You know, this one's still holding up, but the Dow Jones is still weakening quite a bit. So all this is lining up just about as perfectly as you can possibly get. So what I'd like to do is to give you some ideas of how to handle this. As long as we can close higher here, as long as this is not a red bar, all right, that's a good kind, because it should still be up on the day. And it's still giving back quite a bit. You see how below we are, the 382 already. But then the next day, tomorrow's the day, because once we start down tomorrow, which would be Wednesday, it's following that plan that we've outlaid over what happened in 1929 exactly. And if it doesn't do that, I'll be picking peaches in Yuba City. I'll have to look back to my 200-day moving average system that's never let me down, and I'll be working on that. Well, I'll be back doing something else. But anyway, that's what we're paying attention to. You can see the Dow is giving up already. Let's just check the Russell, because it is just, Russell has virtually no friends. How's it doing today? Well, all it did, oh my gosh, this is, you got to love ABCD. Here's Russell today. And my goodness, I wish I'd have seen that a little bit earlier. Well, it's still not too far away. There was the 382. We backed off this morning, and what did we do? We went up and made an ABCD. Looks like, well, just shy of a perfect ABCD here in the Russell. There's AB equals CD, and let's see how shy it was. Wow, 1 point off of the actual high here, folks. So that's another reason to tell you that this is a 2-day rally in a bear market, and that's not a good sign, folks. So let's keep our powder dry and see what's happened, because if it does, it's going to be only the second time in the last 100 years where we've had a legitimate crash. Now, the one in 87 was certainly legitimate, but it was only down 16% in one day. The Dow had dropped 16%. Multiply 16%, well, 15% into what we've got now at 42,000. That means the Dow could go to 27,000, folks, in one day. You think that could happen? I doubt it. But because they have what they call those fail-safe systems, I forget what they're called anymore, circuit breakers. And I don't know if that'll help or not. But anyway, you can see this thing is starting to move lower as we speak here right now. Now, since we're doing that, and I'm interested in it, and I don't want to lose track of what the heck I'm doing, I want to take a look at the S&P if I can find the darn thing. Now, here it is, right over here. See, the S&P, I'm moving down to, there's what we had so far. There was the run up this morning. There's your A, B, C, D to the downside. And of course, what does it do? You'll see it rallies up to just shy of the 1.618 level by just a hair. Well, misses it by quite a bit, about 10 points. But then we had a little pullback here. There's your 382. Now we're starting to roll over again. This means with 2 hours to go, as long as it can stay above these levels right here, then we should be okay. Because if we get down below that, then you're going to be looking at something that's going to be even more ominous than you might want to think of. Okay, so I hope that helps as you meander through these little mazes that I've laid out for you. I don't think I'm ever going to do this again with something like that, because I'm getting so many questions about it and I can't answer some of them. All I can do is tell you that it looks similar to what happened in 1929, and well, we'll find out. But remember, in 29 they had tariffs. The Smoot-Hartley Act came in, and that's what caused the Depression, was a breakdown of international trade. And maybe it'll happen again, maybe it won't. I don't see how tariffs can work because, well, I know less about politics than I do just about anything else except marriage counseling, taxes, and mathematics. Those are my three weaknesses. All right, let's move on here. Oh, we got a break coming up here in a second. To save my bacon here, what we'll do is, how much time we got? 44 seconds. What we'll do is we'll put Apple up here because people have been asking people. One person has been asking me about Apple, and it's been actually, I don't even know. I haven't seen it in a long time. Here's a 60-minute. Well, it's actually been doing pretty good the last few days. You can see it's been rallying for a few weeks, actually. You can see there's our rally, and we were down here, now we're up a little bit today. So we'll move this over a little bit, and we'll find out. There was the big A, B, C, D to the downside. If you remember, we certainly were following that one. There was your A, B leg. There was your C, D leg right there.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, you can see, folks, this is the Dow Jones, and we did not take out the previous day's high. We matched it exactly, and now we're 150 points off of it. So this is not as important. Here was the gap. If you remember, there was a gap on that 1929 chart. There was the 8-day rally, and now this is where you're coming in here, is what happens right now. Now, the NASDAQ did this. It took out that 382 right there, or 127. There's your high. Let's just draw it in so you folks can see it. From your high and low to the high, you see it come right down to the 1.27 level. Then you have the rally back to 50%, and this is the key. Is today, and tomorrow will be the key day. So that's what I'm paying attention to. If it doesn't work, then the market will probably, maybe it'll fake you out, or I don't know. But if it has a quiet day today, and then I'd like to see it close higher, I really would. But you don't always get your wishes. And then taking out this low tomorrow would mean that you're getting ready to make something very dramatic happen over the next 10 days, because believe it or not, folks, when the market topped in 29, it topped September the 3rd. The secondary high was October the 11th. That was after the market broke on the 3rd, rallied up into the 11th, and from the 11th to the 28th, which was 13 trading days, the market gave up 30% of its value, and it was the start of the Great Depression. The bottom wasn't until November the 11th, but the big crash went from the 11th of October down into the 28th. The last 3 days, of course, were, bloodbath. So I don't know if we're going to see a bloodbath this or not, but if there's a possibility of it, because there's so much out there with these, Magnificent Seven. The Magnificent Seven own basically the whole world. Those 7 stocks are worth more than all the other stocks combined on the exchanges. I mean, that doesn't sound like a real figure, but reported by Bloomberg, and they're never wrong, are they? I don't think so anyway. All right, let's take a quick look at some other things that people have a question on. And first of all, we're going to get down to our soybean meal, because we have a really strong indication that we want to be a buyer of soybean meal here pretty soon. Get the daily up. I don't think we're going to be too far away. Oh, we're getting close, Bubba. We're getting close. Here's where we are right here on the July meal. And we'll get this out there. We've been waiting for a very long time, so we're going to put this in here to save you a dime. Okay, here is the pattern that we're looking at. Let's clean this up here so we can draw these in for everybody that are not familiar with drawing it. There was our low in December. The market had a very strong rally. So we know that we have some expansion numbers that we can use on the way down. This is the first one right here. This is a 1.27 expansion of this move right here. Now, as you can see, this is where we want to be buying right here at around 286 in the July meal. And July meal is pretty cheap, folks, because it used to sell for a lot more. If you go back and look at the weekly chart, which we can do here real easy, you can see here that we are on the fringes of something pretty cheap. Now, this is what we call a bad tick, so I'll get rid of this and make it look legitimate. But as you can see, we're coming down here. Look, this is going back the last few years. Look at this. It's been in a strong downtrend, and we're trying to buy it down in here. So that down in here, if it follows the way we think it's going to follow, and if it does, what you'll be watching is this right here. That's your AB equals CD, and that's going to be the one for me. So there's drive 1, drive 2, drive 3, and let's just walk through this. If you think there's anything to this ABCD phenomenon, there's AB equals CD right there, okay? That means we must have another ABCD right here. There's your AB equals CD right here. And that's going to be down in here, but we're going to be buying it here. This is it could get there, but if it gets there, they're going to be stopping me out, because I don't think it'll get there, because I'm looking at this really nice 3 drive to a bottom pattern. And if you look at the smaller pattern right here, it's going to take you to the promised land also, which is right there. So you got 1, 2, 3 drives to the bottom, an A, B, C, D, an expansion of 1.27. I don't know what else a person could ask for. So buying July meal down here at around 287 and put a stop at 267. You have to be a farmer. You don't have to buy the land. You don't have to lease the land or the equipment. You don't have to buy seed or nothing. You just buy some soybean meal on the exchange. and you're ready to go. You still have the sleepless nights, but that's neither here nor there. Okay, let's get on and talk a little bit about live cattle. And one of the things about over here, folks, they do not have United States type meat. It's a lot. They have Canadian beef, which is okay, but it's not like a good old US of A, that's for sure. Let me see, live cattle starts with the L. Here's where we go. We'll get August up here. Should be getting ready for a sell-off here pretty quickly, but not today. But let's get ready for it. I think we have by the way, folks, my guest on Friday will be Bill Meridian out of Vienna, Austria, Cycles Research. He's always a great guest, and as you can see here, we've had a little bit of an up move here on April Fool's Day. I believe this is where we're headed on this. We're going to make a new high here very, very shortly, but boy, folks, when cattle were $1, now they're $2.05. When they were $1 back in '76, housewives picketed and they wouldn't buy beef, hamburger, because it was too expensive. That was $1.05. Now it's $2.05, and everybody's willing to pay it. Shut the front door and raise them in. But I believe that we're getting ready for another little poke up here in the cattle, and I'll be ready for this one because there's your AB leg, there's your CD leg. We're going to come up one more time up there to about can you believe that, 211 for cattle. And we could easily get there because we're only a heartbeat, a couple of good days away. And I'd be looking to be a seller of that for sure because it looks really interesting from the standpoint of just technical analysis. And if you blew it up just a little better, you can see there's a little ABCD coming in here too. Just looking at this daily chart, there's your AB leg right here. There's your CD leg right there. Ooh, we're getting close to that number, folks. We're looking at 211, and you'll be in heaven if you're getting ready to trade live cattle. June contract, Chicago Mercantile Exchange, 111. Are you ready for this, folks? Jackson Boulevard, Chicago, Illinois, 60626. All right, I think we have to take a break here now, and we get back. We're going to go over a couple of currencies, and we got 39 seconds left, so let's do the euro first. And hopefully it'll do the euro first, and God willing, there's the euro. It should be pulling down a bit. Oh, it's getting ready. It's really trying. Hold on, this is the daily. We'll get back to the reason why we're watching this so very closely here when we come back from our break, because this is going to be really interesting, because there's the 382, and we're going to test it one more time, I think, and then we're going to see whether it's ready to go. So let's take it.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're going to take a look here at the euro, the pound, the dollar index, and also the Japanese yen. As you can see here, we've had a pullback here at the exact 382. Markets rallied. Now it's making a small pullback right here. If we look at this on a little bit smaller time frame, you'll see this is what we're paying attention to because it's in this zone right here. There was the move back, now it's the move down. So we're expecting it to hold these levels right here. And the reason why is that 382 is so very, very important. So what we would expect, let's look at the hourly because it gets rid of all that Gamuka stuff. There is what we want to see. See, there's our 382. We're right back here. There's our ABCD to the upside. Here's our ABCD coming to the downside, telling us that we should have some pretty good support down in this level right about here at your 786. There's several reasons to say you should get this low. It's only 50 pips away, but that's what we're paying attention to here. Now, if you'll give me just bear with me for just a second, we'll get rid of these cattle right here. And if you don't mind, I would like to check to see what's happening with that position in the gold. Let's get this out of the way here. And we're holding up. Yeah, that's doing okay. It's moving a little bit higher. That's what I wanted it to see. So it makes me a happy camper. Get this out of the way here. And let's take a look at the stop and P because it's holding its own right here, folks. This is set up so incredibly like 1929. It's a little scary. So that's we'll find out how that all works out. All right, we'll get back here. Now let's take a look here at the dollar index. We'll do that one. Let's do the pound because that's popped up right here on the old clock on the wall. Boy, this thing's holding up really well. I think they're getting ready to give the old U.S. dollar a run for its money the way it looks like. This doesn't back off at all, folks. Look at this high level right here. So they might be planning something like whatever they might plan. I don't know. Let's just make sure we have it. See, this is just a high level consolidation. Look at this. Tremendous run up here. No pullback at all. I mean, that's very unusual for the pound to be that strong because they have more problems. Well, they have equal problems that we have. But you can see we didn't even have a 382 pullback anywhere in here. So the one thing I'd be watching is if you get one, that would be right at about 128, down about a half a yard from where we are right now. But watch that. That should be really strong support on the British pound. And this has had a tremendous rally off the bottom. Look at this weekly chart, and you can see how bearish we were back here. We took that whole move down, and look where we are now. We're sitting here now 1, 2, 3, 4, 5 weeks. So this is a sign that we're getting ready to do something pretty significant. And after that big of a run, Chance favors the prepared mind, as Louis Pasteur would say. I would think it'd be to the downside, but we have to do one thing at a time. The next thing we're going to do now is look at the old Japanese yen. We'll get the old Japanese yen up here, and that'll wrap this up. We got to do the U.S. dollar, which is the flip side of the others. Now this should be having its pullback, and there it is right now. See, it had the move right here. It's at 382. Then the back off today that we had, you can see here, there's the move down yesterday. There's today's action. You'll see all that was just a nice little 50% retracement, right on the money, 50%. Now it's hanging in right here. This is a downtrend. You got lower tops, lower bottoms. This is still in the downtrend. So try to find a place to get short. If we go on a smaller time frame, let's say hourly, you'll probably see that we could have one setting up right now. See, that didn't work because it went straight down, which it does happen. And always, folks, I have a rule: don't take the losing trades. It's very important to your financial health. Do not take the losing trades. Now here's one that may be a winner. From your high down to your low, and then you have an ABCD. Watch this one here, because if you get that, you're going to have an ABCD in a downtrend. That's the kind of trade that you'd like to see. Just draw it in. We'll give you the price here in just a minute. And here comes the man with his hat. He's drawing the number out of his hat, and it says 150.45 is the 61, well, the ABCD, basically, that's the number, 1.150440. That's the number to short the U.S. dollar against the British pound, right there. So that's what we're paying attention to with that one. Now let's switch over and we'll take a look at wheat, because we really want to be another buyer of wheat. It's down today, as I recall. It was earlier, which was a good thing, because I want to buy it and they're trying to make it cheaper for me. And as you can see, well, it didn't go down as much as I thought. Here it is over the last few days. I wanted to get down to here, but I don't think it's ever going to get there. There was a big report that turned out to be relatively friendly to the wheat market. It's backed off a little. If we go to the hourly chart on this, you'll see that there was your report came out right here yesterday on the 31st, and supposedly the original interpretation was bearish until they realized that prices were going up, and then they made it bullish. And as you can see now, we have higher highs coming in, higher highs, higher lows. It's still bullish. And if you'll notice here, from the low of the report to today's low was exactly a no, right exactly at the 382. And that tells us that we're going up here to the number that makes it all work, 1.618, because if you draw in, those ABCDs, that's where that's going to be taking you, right up to this level, right about here. Then we get a pullback, get ready to try to buy it, because I think food stuff is going to get more and more expensive. As I look at some of these charts, you're seeing some really bullish charts. Let's take a look here at the soybeans for a moment and get that. We've already done meal. Oil's going nuts because, hold on just a second. That's sugar. Just to get oil is up here. Oil is going nuts because of the fact that there is a drought over in, shucks, I don't even remember where it is, but look at this thing. This has just exploded through here. Look, there was your 382 today, our 61% retracement, and boy, it just took off like a rocket. Now, there was not a good ABCD in here, so that's not a Gartley. This is just a retracement pattern, but this is a big move, and it could lead to something on the weekly chart that would even be more unusual, and that is the fact that it's coming out of such a big base like this. It could really have legs, folks, because all you have to do now is to draw this in, and you'll see that we could easily get up here another 4 or 5 cents, okay? And that's coming off this huge base, and if you measured it from the high way back here, look what's happened, folks. You got an ABCD coming in here, and there it is right there. You got a triple bottom. It's going to 51.37, folks. That's the way it looks like to me. So Let's take a break. We'll get right back to looking at soybeans themselves.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're taking a look at May soybeans right now. There's a May contract, which is the old crop. It's already been harvested, and then there's a new crop, which they're planting right now. And that is in November. That's the big spread, long nearby, May or July, short November. Anyway, this is what we're looking at here with soybeans in the May. It's in an uptrend. You can see we've got higher bottoms. We also have lower tops. It means that you're basically in a triangle. It'll probably come up to this level right here, which will complete the 61% retracement. That's up about another 10 or 12 cents. At that point, I will look to be a short seller, because you do have lower tops, and you can see just a really nice ABCD pattern right here also. But let's take a look at November, because that could be the mystery one, because we've gone so many years, folks, without any type of a problem with the crop. It's going to, see the problem they had with this crop, folks? It's called bad data. Just let me get to the 4-hour chart. I'm sorry, I don't know what's causing that, but there you can see it's much different pattern. They're much cheaper. Look, they've been going down. They've been, basically prorating beans. quite a bit. We have lower tops all in here, whereas the nearby are stronger. So the nearby is stronger than the deferred, so they think they're going to have a huge crop coming out of this. Well, we don't know what the farmers are going to do, but here's where you are right now. You got slightly higher bottoms here. You're in a very, 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 very pronounced downtrend. Look at this, folks. This thing is just about as bare as you can possibly get. This high that you made right here, if you were to measure it from the high right back here, where does it come to, folks? Right to the old 382, then it backs off, and now it looks like we're getting ready to swing around to the upside on this. Keep an eye on this one. It could be a real sleeper, which I will do. Speaking of sugar, which I just spoke about, haven't looked at that, but we have a question from our good friend Mr. Simonley today about sugar, and I will bring it up, and that's an SB. Why SB? I don't know. Sugar the blue? I don't know. Okay, sugar's actually getting ready to move on up to the possibility of making $21. We'll be right back, folks. Stay tuned.